Welcome back. You're still watching Smart Money on CNBC-TV18. We're in conversation with Gurmeet Chadha, the managing partner and CIO at Complete Circle Consultants. And of course, we're talking about the big theme, which is the pickup in the investment cycle. Is this that same period in 2003 to 2007 where we saw a big boom in the investment cycle? Could be the case. Gurmeet, we are talking about different themes, and one of the spaces you like is the utility and the infrastructure space. Take us through the potential there, and which are the stocks that you prefer?
So infra has two elements, the physical and the digital. We like digital infra also equally good. So one play has been Tejas, and it came into our radar when Tata Group acquired a majority stake in FY21. It's been a great story since then. This year their order book is 2,000 crores. So it's basically a telecom OEM, which very designs, manufactures, telecom equipments and networking solutions and products. So great beneficiary of telecom capex, data consumption, broadband network expansion, 5G rollouts. So very, very secular story there. And it's turned EBITDA positive FY23 and has almost 2 times order book already for current sales. And we think that this, India's differentiation this decade is the digital stack we have. And this one fits the bill perfectly. Okay,
so that's on Tejas Networks. Power Grid, I think, has been one of your old favorites, right?
Yeah.
But it hasn't really performed in the last couple of years. Why is that? And why do you think this time there could be a turnaround?
So I think this move to renewable. So government goal is to get to 500 gigawatts by 2030. Now, assuming they even get to 400, 450, there'll be a huge capex spending on transmission because the grids and everything needs a lot of redo. The opportunity is almost $30 billion so it's almost averaging 50-60,000 crores spent per year. Recently, of the tender they got, their share was almost 50%. So they will get a lion's share in this space, a 6% dividend yield, 10-11 times earnings. So valuations are pretty reasonable. And the overall opportunity size is pretty huge and very good order book as well. So that's, again, it's actually linked to power. Again, transition to REC and traditional gas pitching in. So we like Power Grid as well.
Okay, like Power Grid and you like Tejas Networks. Got that. Let's move on now and talk about the home improvement space because, that's one sector you've betted on for a very long time. I remember Polycab was one of your top picks and that had a huge rally. You like Kajaria Ceramics and you continue to stay with that. But my question here is, what are the valuations looking like now? And is it towards a mature end of the upcycle?
So what happens is, as I said, Sonia, is that once the entire size of the opportunity is big, the profit pool can really expand. The entire sector can see it. So home improvement for us is a big theme. So there are pipe makers, there is cables and wires makers, and some pockets it has become expensive, like cables and wires as well as the pipe guys, right? Especially with tiles and sanitary ware, the unorganized market is still quite large, right? So Polycab is now 22% market share. It wasn't that 3 years back. Right, so Kajaria, for example, again, household name, very, very strong brand recall, great dealership expansion happening. There's an export opportunity now. So August exports are up almost 40%, almost 2,100 crores for ceramic and vitrified tiles. Then there is duty on China, anti-dumping duty on China by a lot of countries, right? Third, India, you made gas-based plants compulsory. Gas prices are. So multiple tailwinds, is supporting that sector. And they are guiding for 15% volume growth this year as well, which is pretty nice. And they have nice capex plans, good balance sheet, very clean balance sheet. So that's the reason we like Kajaria.
Okay, and what about some of your earlier favorites like Polycab, etc.? Is it still too late to get in?
Or? Still good. Polycab is still good. It's still 40 times. It's not what it was in IPO, 15 times, right? But see, stock grows with earnings and PE rating, right? I think the earning growth is still there.
Okay.
Right, so it may not compound at let's say 30-40%, right? Can't. It's not reasonable also to expect stocks to do that. But I think there is still, if you have reasonable expectation, I think it's still decent.
Okay, don't keep your expectations very high, right? Manage them after the run-up you've seen in Polycab. The other one is Cera Sanitary Ware. You like that as well.
Absolutely.
Is it, there's a big real estate boom that we're seeing currently. Is that the primary reason? And what are the big triggers?
Both. So there is new housing and there is need for, COVID made people spend more on their houses.
Yes.
Because you spend more time at home. So you want to redo your kitchen, you want to redo your washrooms and all, and you don't mind spending 5-10 lakhs today on, redoing a kitchen or a washroom, right?
People rediscovered their homes during COVID, no?
Yeah, and so there is demand on improvement as well as new housing, and they are expanding capacity again. And in Cera's case, their dealership network is now 4 times of what it was 5 years. So they're really going. So I like somebody who goes B2C after B2B with strong brand recall. For me, that is a long cycle. It's happened with Havells, happened with Polycab. I think it's going to happen with both of these, Kajaria and Cera. Okay. Now they have a brownfield capacity coming up for faucet ware, other than the sanitary ware, which I think will add to the.
So Cera is present both in B2B and B2C.
Now we're expanding, and in 45% sales from tier 3 and below cities. So very strong brand recall even in upcountry. Okay. So that makes the brand, the brand recall is extremely high. Okay. So that makes us, a little constructive.
On Cera sanitary ware. Okay, well, let's just try and revisit all of these themes, right? And just to understand from you what the potential is in the run-up to the general elections, because history has taught us that markets tend to always do very well, either in the run-up or post the general election. I think it has to do with, of course, government spending, boosting infrastructure, boosting job creation, etc. What is your thought on how all of this could come together as we head into April 2024?
I think there is that risk will always remain of general election, right? And so far, I think the market is pricing in that we would continue to have a stable government. Even 2003 to 7 cycle, Sonia had 3 10% corrections and 1 30% correction in 2006. I remember June 12th, there was a lower circuit of 1100 points on Sensex. So markets will have corrections in between, and that could be because of election, could be for reasons like oil shooting up to $100 or the 10-year US going up to, let's say, 5%, right? So intermittent corrections will come, and I think the market would want to see that. But I think the rural economy will also stage a bit of a comeback with election spending and a lot of infra work happening, and that's the reason. And as I keep saying, this is should not be your only portfolio. It's just that this side of the portfolio has got completely ignored. So it's good time to rebalance and be a little more, in fact, I would say more diversification is very important right now. Manage risk better. Rest markets will.
So, in the next 8-9 months, there's a general election. But in the next 1 month, there's also a big event, right? The Cricket World Cup, which is coming in. And that's a big focus area because, we were talking about how hotel rates have just hit the roof, right?
Absolutely.
Even these platform aggregators, something like a Zomato, there's generally more ordering activity picking up during the sporting events. So what would your top 2 or 3 stock ideas be in the run-up?
So we were lucky in terms of getting into lemon tree very early, right? When it was 2-digit, much below $70. They've added one capacity in Mumbai near the airport. Yes. And the model has changed. So it's not developing. It's also co-owning and management contracts. You acquire a property, and that's a very asset-light model. So Indian Hotels is doing it, Lemon Tree is doing it. I think even ITC is now following suit. So once your capital efficiency comes in, then the business which is very cyclical can become a little more. So it still is cyclical, but it will become a little more. The cycles can be a little longer. Occupancies are up, ARRs are up. So we like QSR. I personally think that this is one space. The combined market cap of QSR is 70,000 crores, less than Cipla. So the way we are consuming pizzas and etc. So I think I'm bullish on QSR. I also think some of these new age companies will do well. I don't know. Maybe it's too early to call, but. We are watching Zomato. We haven't really taken a call on it.
It's 100 rupees right now.
So we're watching it.
Staring at 200, 300 as well over the next couple of years?
I don't know. I just hope this ONDC doesn't damage their take rates. If that doesn't happen, good thing is there's duopoly now. So people have tried. Amazon has tried in Bangalore. Uber Eats and, the food pandas are out. So it's more a duopoly play. And we're getting used to ordering food online. So
absolutely. It's an addiction more than anything.
Right? Absolutely.
All right, Gurmeet, really, great speaking to you, and hope you visit Mumbai more often and come on our show. Thanks a lot for joining in.
Always a pleasure. Thank you.
All right, with that, it's a wrap on Smart Money. Have a great weekend.